Strategis's Jason Trennert says hard to be short this market. We believe that until the election. We're keeping a close eye on the 10-year to tell us when to get bearish. Markets had difficulty at 4.5% 10-year. At these levels, the good times are likely to roll. If the good times are likely to roll, Jimmy, then that would allude to the fact that the broadening is going to continue to roll.
Which it probably won't surprise you, Scott. I agree with the broadening, that is. I agree with what Josh, Rob, and Steph have said. I think I'll add one other thing. Normally, September is a tricky month. I think we'll all agree on that. But it feels like the difficulties of September were front-loaded into August. You know, it's hard to remember that 4 weeks ago we had that sort of mini meltdown, the yen carry trade, whatever emphasis was put on the unemployment report for July. And that's all in the rearview mirror. You had the spike in volatility. And I'm kind of struggling to think about what could upend things in September. You mentioned with regards to Jason Trennert that maybe the election, of course there is the potential for the election to be a volatility-inducing event. And of course, military conflict around the world can upset the apple cart. But just echoing what's been said, the economy is strong. We're looking at 2% Atlanta Fed GDP on top of 2.8% for last quarter. You've got profit growth. And as interest rates come down, it's going to favor the non-tech industries that tend to be more debt-oriented. Things like car sales, things like housing, Steph, you mentioned that. Things like industrials. It just helps across the board.
Is that why you added, Steph, to Home Depot?
Yes. I mean, since the terrible quarter that everyone was talking about, the stock has done nothing but go higher. And it was an encouraging report, not on the same store sales. But I do think they do de-risk the same store sales being down 4% for the year. So I get that. I think that's the low mark. But I think the profitability was something that was so impressive to me, Scott. It was up 75 basis points year over year, excluding the SRS transaction. I mean, imagine what they can do when you have top line on top of their cost cutting and profitability focus. So it's not cheap, but it's only up 7% year to date, whereas the builders are up double digits. And I think there could be a catch-up trade. And as I mentioned, those July new home sales, very encouraging, especially as rates continue to come down. I think you need to get mortgages below 6% to really start to see a refi sustainability, but you're starting to get it. And I think that the expectations are still so low.
Every tick lower in mortgage rates, you get a burst of refi.
Yeah.
So we'll see what happens. You own Depot, right? Mm-hmm. You like adding to it here?
We're not adding to it. We own both Home Depot and Lowe's. They've been long-term holdings for us. They've done incredibly well. One of the issues that we have is they've compounded so effectively over a long period of time that we can't trim them. And I would tell you that the story here is the move to professional customers and possibly the margin pressure that they've seen in that. And the question that I have is, can they maintain their margins in that type of environment and have that premium valuation? Not selling it, but I don't know that I'd be.
But they just showed you that they can grow margins because they grew margins 40 basis points. Top line numbers, right? Headline numbers. But 75 basis points if you exclude the acquisition that they did. And the acquisition that they just did is going to be accretive to earnings. So to me, I think you're at kind of almost like at a trough in terms of earnings because you don't have that top line just yet. And if you're at a trough, it's going to look expensive. It is not cheap, but it's going to look more expensive than I think it actually is.